What if I told you that a major Bitcoin warning was right in front of us, and almost everyone ignored it? Some saw the signs. A few experts tried to sound the alarm. But most investors, they kept buying, holding, and believing Bitcoin was on an unstoppable rise. Until reality hit. Today, we're breaking down the Bitcoin warning that slipped under the radar, what it means for the future of crypto, and most importantly, what you need to do next to protect your investments. Because in crypto, the ones who don't pay attention pay the price. The warning everyone ignored. Bitcoin's history is full of booms and crashes, but this time, something different was happening. There were clear signs, red flags that suggested trouble ahead. Whales were quietly moving their assets, institutional investors were pulling back, and on-chain data showed a massive shift in market sentiment. But most retail investors, they didn't notice. Instead, the headlines were screaming, Bitcoin to $100,000. The bull run is just beginning. Never sell your Bitcoin. The hype drowned out reality. But the truth, Bitcoin's price movements were mirroring past crashes, and history has a way of repeating itself. The biggest red flags. So what were the key warning signs that investors ignored? Let's break them down. 1. Whale movements, smart money cashing out. One of the biggest indicators of a coming Bitcoin drop is when whales, large investors, start moving their funds. On-chain data revealed that Bitcoin whales were transferring large amounts to exchanges, a classic move before selling. But instead of taking this as a warning, most retail investors kept buying. And when whales sell, the price tanks. 2. Miner capitulation, the silent warning. Bitcoin miners are the backbone of the network. But when mining becomes less profitable, they start selling their holdings to cover costs. A spike in miner selling often precedes a market downturn. And guess what? That's exactly what was happening. But retail investors didn't connect the dots. 3. Low liquidity and volatility spikes. Bitcoin thrives when there's strong liquidity, meaning plenty of buyers and sellers keeping the market stable. But leading up to the drop, liquidity was drying up. This meant small sell-offs were having a massive impact on price, leading to sudden crashes. Experienced traders saw this as a danger sign. But most people, they kept believing Bitcoin would recover instantly. What happens next? So now that the warning has played out, what's next for Bitcoin? Will it bounce back? Is the bull market over? Should you sell, buy, or hold? The truth is, Bitcoin isn't dead, but the game has changed. Institutional investors now control more of the market than ever. Regulatory pressure is increasing worldwide. The market cycles are becoming more predictable, but only if you know what to look for. This means that blindly holding without a strategy is no longer enough. The winners in this market, they're the ones who watch the signs, adjust their strategy, and stay ahead of the curve. What should you do now? If you're invested in Bitcoin, this is your wake-up call. Here's what you need to do. Pay attention to on-chain data, watch whale movements, miner activity, and exchange inflows. These tell you what big players are doing before the price reacts. Don't follow the hype. By the time the media is saying Bitcoin to the moon, it's often too late. Follow data, not emotions. Have a risk management plan. If you don't have an exit strategy, you're gambling, not investing. Use stop losses and take profits at key levels. Think long-term, but stay adaptive. Bitcoin has survived every crash, but that doesn't mean you should ignore short-term risks. Adapt your strategy to stay profitable. At the end of the day, Bitcoin is still one of the most powerful financial revolutions of our time. But investing in crypto without understanding the risks, that's a recipe for disaster. The warning signs were there. Many ignored them. Will you make the same mistake next time? Let me know in the comments. What's your next move for Bitcoin? Are you buying, selling, or holding? And if you found this video helpful, hit that like button and subscribe, because in crypto, knowledge is profit.